So thank you for joining us here today, Jens.
Hey, thanks, Jack. Appreciate the opportunity to talk to you today.
So I want to start things off because you have quite the backstory. Why don't you just introduce everybody to yourself?
Oh, absolutely. So, yeah, my name is Jens Nielsen, and from the accent and the name, probably people can hear that I didn't grow up in this country. Actually, I was born and raised in Denmark. Kind of as a young age, my early 20s, I was curious about the world, and I decided to first to move to London, England in 1994 for a job opportunity. And it was a bit of a shock because I grew up in the middle of a small town, and come to a big city like that was a huge change. And then shortly thereafter, in 1996, I actually got an opportunity to move to the United States. Maryland was where I started out. I was in telecommunication, moved into information technology and IT, worked there in many years. And since then, I fell in love with the outdoors, skiing, biking, and everything else. And then I decided to move west. So we made the move from Maryland to Albuquerque, New Mexico about 12, 13 years ago. And then since then to southwestern Colorado, where I reside now. So I'm in a small town in the middle of the mountains and just absolutely love being here. So that's kind of how I ended up where I'm at. And I guess, the reason why I'm here on this podcast is kind of that, how I have changed from being an employee to more of an entrepreneur in the real estate field. And I think that's probably what we're going to dig into today.
Yeah. So how did you get into real estate? I seem to find and run into a lot of IT related people when it comes to real estate, and everybody has kind of a different story. So how did that start off?
I think, having a job is kind of seen as as security to a lot of people. You got a job, a steady paycheck, and, if you put money into your 401k, you can retire one day. But I also realized there's very little security in that my employee can decide to let me go in at any time, or the economy can change. So I decided I really wanted to create a passive source of income. And that's really where real estate struck a chord, right? Because you can control the asset, you can actually see it, and you can improve rents and so forth. And I'm in the real estate, like a multifamily investing for passive cash flow through rentals, just to clarify that. And I decided that was a good avenue to generate that side income to create some additional, security for me and my family. And I don't know what come with the IT people, maybe just because we're analytical and we can take the numbers from a deal and really analyze it and dig into it. And that feels, maybe natural to us, I guess. So.
Sure. So you've been focusing on multifamily. Did you jump directly into multifamily? Most people kind of put on the training wheels with single families, and then they kind of work their way up. Did you just jump right into multi?
Just started to multi because where I live right now, the median home price is somewhere north of $500,000. So I couldn't see myself going and buying a house here and renting it out. The numbers just wouldn't make sense. So I had to go out of my local area. I did look at a few, maybe an hour drive. I looked at some single families. I was like, it's too much work for little gain, in my opinion.
Mm-hmm.
If it was locally, I could do it all here. Maybe it's a different story, but I was like, okay, I got to go out of town. So let me just move straight into multifamily. And I started talking to people. I have a friend here who owns some multifamily out of town. And he just said, hey, don't worry about the single family. Just go to multifamily. This is how you analyze them. And he connected me with a broker back in Albuquerque. And I decided to go there and just bought a fourplex, and just to see how that would go, essentially. That's how I started.
So how long have you been doing this now?
It's a little over 3 years.
Sure.
So it's not a ton of time, but I've grown my portfolio from, I think we own 82 units, me and a couple of, most of them owned by me and my wife, and then we have a couple of partners in some other properties. And then, I've actually started raising money for some syndications. I'm close to 500 units that I own kind of actively, and then I've done a bunch of passive investing too through self-directed IRAs and other things. So it runs a gamut from mobile home park to self-storage to multifamily to note funds and everything else. So it's
Sure.
kind of a lot
So
there.
tell me, how did you decide to start the syndication?
So, a lot of people look at syndication as kind of the holy grail for multifamily investing, because you run into the problem of running out of your own money at some point, right? So you can either continue to save and find a way to to buy additional properties in your own name, or you can syndicate, essentially, using other people's money to buy bigger properties. And I felt like that was a good path to take to continue to grow, essentially.
Hmm. So you place a lot of importance in education and stuff too, regarding especially the multifamily investing. Can you talk a little bit about that? And I think you actually coach people as well.
Yeah, I mean, so when I first started out, I didn't really know what I was doing. I just read a few books and try to not make too many mistakes. And I at some point realized, well, this is all good and it's my own money, but if I at some point want to bring on partners and bring on other people, I need to make sure I'm educated, make sure I know what I'm doing, can underwrite a deal in great detail, but also can look at markets, can look at trends and everything else. So I joined a coaching group. It's been, over 2 years now that I learned a bunch of stuff from. And then I felt like I grew personally enough so that I could actually help other people so I can help other people with their growth as an investor. And so I've kind of done some of that too, helping some people to bring them up and get them started.
Sure. So do you offer this type of education like on one-on-one basis, or is it more something people can find online?
It's more like one-on-one. I mean, there's plenty of resources out there to learn from various, Bigger Pockets and other websites, but I try to work, with people one-on-one to just kind of bring them along and really teach them.
Sure.
And mindset too, right? Because we end up getting analysis paralysis and don't really know how to go to the next step. So that's what I help people with.
Yeah. So let's talk about that a little bit. Mindset has become is such a big part of this, and it is hard for people to even just to get into the single family investing. You jumped right into the multifamily. What kind of mindset or what kind of hurdles did you find people would have to work through?
Well, there's always the risk of loss, right? You put money into something and obviously you put your capital at risk plus the loan, the mortgage you take out. So there's always risk involved, right? And you have to first kind of look at, does that risk outweigh the potential gains? And then you also be willing to be comfortable with that risk, right? And there's no gains without risk, right? As we know, we can't really grow as a human. We can't make any grow our capital or anything like that without taking risks. I think a lot of people kind of get stuck in it, like, oh my God, what if it goes wrong? Well, there is that risk, and it could go horribly wrong, as we saw in 2008. But if you never take a risk or do anything, you're never going to get beyond where you are right now. Right?
Mm-hmm. So what I found too is that you got to get comfortable with the risk, but you also have to be comfortable with making that decision. That getting through that mental hurdle, that you have to have some confidence in your numbers, and eventually one of the best ways to learn is to get some skin in the game and actually do it, right?
No, absolutely. I mean, put that money to work, right? And then also make sure you stay on top of what's going on. I mean, I live out of state, and so I have a property manager, but I don't neglect my own responsibility in these deals, right? I make sure I keep on top of what's going on, review the monthly expenses, and question things that I'm like, you did what? And you went and repaired the refrigerator 3 times instead of just replacing it. And, just kind of being on top of it and take that responsibility, because a lot of people say, oh, it's passive investing and passive income. Well, maybe if you put money into somebody else's syndication, it could be passive, but if you own your own stuff, you still have to keep track of it, not on a day-to-day basis, but on a regular basis to stay on top of it. Because,
right. So, to stay in the proper mindset, I find that, you have to constantly be feeding your mindset with new content, what do you recommend people do regarding that? I mean, whether it's being around like-minded people, podcasts, what would you recommend?
I think just studying positive, study mindset kind of techniques or whatever. And actually, let me show you. I got this, a book is actually on my desk. This is one of my, Jack Canfield, The Success Principles is one of my, really an eye-opening book. Just the idea of taking personal responsibility for what you do, and just working through any challenge you have, and just be resilient around everything. So I try to practice some of those principles. I do listen to to podcasts and just try to learn as much as I can. And also, if I make a mistake, it's not a fault of my character. It's just a mistake I made or a bad decision, and I have to go back and be willing to take that responsibility and change course and move forward, right? So it's if we didn't make any mistakes, we never learn anything. Just kind of learn, move forward, move on, and on to the next thing, right? So that's kind of the approach I like to take there.
So it sounds like when you do your investing, with the multifamily, you're not investing in your backyard. Can you talk a little bit about how did you select those markets and where you invest today?
Yeah, so you're right. I don't invest in my own market just because it's just the numbers just doesn't work here. So I went and met with a friend of mine who owns some mobile home parks, and he's also owned a bunch of apartments. And I say, how do I get started in this business? And he said, well, I would go to Albuquerque, New Mexico happened to be the closest bigger city to where we're at. I'm in Colorado, but Denver is really far away. It's like 7 hours of driving. So Albuquerque is closer. So he said, but go and talk to this gentleman, this broker. He can help you out. He's helped me the last 15 years of my career. Sold and bought a bunch of stuff. So I connected with this gentleman, this broker, and he very quickly was. So actually, I'm going to step back. Why did I chose Albuquerque? Mainly because it was a city I used to live in. It was close at that time. If I knew what I know now in terms of analyzing a market, maybe Albuquerque wasn't the best cash flow or didn't have the best projections. Things were very slow to recover there. Mm-hmm. Things have actually gotten a lot better lately. So in retrospect, I've kind of hit the rising tide, I guess, there. But
right.
Going back, it's probably not like things weren't looking that good 3 or 4 years ago. But hey, again, the numbers made sense, and it was a smaller property, and it was something I felt comfortable with, and I could get there really quickly. So
sure.
Yeah, reached out to a broker. He helped me out. We found a small fourplex. We bought it, put some, rehabbed it, and bought another one shortly thereafter, and then 11 units and stuff like that. So we quite quickly just put some money into these deals and try to learn from them and grow with it. So that was just kind of the start.
So you said that if you knew what you know now regarding market analysis, how do you analyze a market? Like, what's a good market today? Like, how do you figure that out?
I mean, sometimes also, the market could also just be the one you're in because you just make it work. If you're just trying to get a good cash flow and you're willing to ride out the ups and downs, any market can probably work for you. If you're trying to, do a syndication where you're trying to get in and out in 3 to 5 years and double your money and everything else, you got to be very specific about it. So you want to look at population growth, job growth, just a business that's moving in there. Is it a friendly environment for businesses, tax and so forth, right? So right now everybody talks about Dallas or Phoenix or Orlando or some of those cities that are really growing like crazy, but that also means that prices are going up. The cap rates are getting compressed, so it's harder to enter these markets, and so that's the flip side of that, right?
So, well, you talk about cap rate. Let's go down that road a little bit. Like, so when you're analyzing a property, what are you looking for? Because as far as I'm concerned, when I'm looking at a pro forma, it could be just fiction for all I can tell.
Oh, sure. Yeah. The broker just put something together and said, well, if everything goes well, this is how it can perform. Well, ideally, you want to get the sellers 12 months trailing income and expenses. So you can actually see what is the current owner doing in terms of income expenses, and you look at what the net operating income is, and you base at least your initial analysis on that. Right now it's tough to go out and buy a property and just pay straight on their NOI because somebody's going to probably outbid you. So you have to look at what are the value adds you can add to it. It's an opportunity to raise rent, reduce expenses. What other opportunities are there? So you look at that and you look at your upside and you say, okay, what's a reasonable price? You obviously can't buy it on the projected income either, because then you're taking on all the risk to raise the income to that level, right? So you have to find a balance between what it currently is doing and what it could do, and then make sure you raise enough money to pay for all these improvements and capex expenses and stuff like that. Right? So,
Mm-hmm. What are when you're talking about multifamily, what are some quick items that are like low hanging fruit that you found that you could add that additional value?
Well, first of all, reduce your delinquencies, right? Make sure you have good tenants in there that actually pay on time and may be very, fair, but firm but fair. So if they don't pay rent, make sure they get posted. So you kind of make sure you collect rent. That's obviously the top line there, right? Then the other thing you can look at is can you bill back some of the utilities, using RUBS, ratio utility billing system. So maybe the owner pays all electricity, all in gas. Maybe there's an opportunity to bill back some of that if other properties in the market would do the same thing. Look at your expenses. I mean, are you paying hundreds of thousands of dollars a year for your pool maintenance? That maybe you can reduce that. Are you do you have a laundry operated contract there that's crazy high? There's a lot of ways. Is your payroll bloated? Just negotiate, look at every line item on the current expenses and see if there's an opportunity for improvement there. Is your insurance too high? So there's a lot of ways just to maximize the current performance of it. Then obviously the next step is, can you raise rent? Can you improve the property and raise rents? Which is the value adds.
Sure. So do you find that as you're dealing and looking at some of these opportunities, a lot of landlords get comfortable with the status quo? And, you brought up insurance and some other those type of costs, those recurring costs, and they get comfortable and they just don't shop around, and there's opportunity to be had there?
Well, absolutely, right. If you bought this property 10 years ago and you're making good money on your initial investment, yeah, hey, I don't have to worry about it. I mean, we just bought a deal in Pennsylvania where they were running 10% vacancy and the stock market was more like, 3 to 5. I'm like, why are they not trying to optimize the performance there? Well, and they were out-of-state owners. They probably didn't care. They're probably making plenty of money on it. And they're like, whatever, we make our 10, 12, 15% on it, so that's fine, But obviously, as a new owner, we needed to push that to make a better return on our investment, because we had to pay more money for the property, right? So yeah, of course you get comfortable, right? So it's just look at you get your car insurance bill and it goes up a little bit, and you're not motivated enough to go and renegotiate until it gets too high, right?
Right. Yeah, I was wondering, about that. I think of the car insurance because you kind of just follow suit year after year. It just gets renewed automatically, and you don't really take a moment to shop around and make sure you're getting the best price. So I would assume that that's probably the case with a lot of property owners just in general.
I think so, especially if you own it for a long time. You're not motivated enough to really optimize your performance. But then if you go in and buy and syndicate and you're really trying to maximize the return to your investors, you have to look at all those things, right? And but then obviously over time, do you also get comfortable? I mean, that's a risk you take, right? And you have something you have to stay on top of, and
right.
Return starts falling off. You got to look back at how can we, what problems have you encountered? How can we improve that again?
Sure. So as you're collecting this information on this new market, you already talked about building or, having a broker. You're working with a broker of some kind. First of all, are they bringing you these opportunities? Are you finding these off market? How does that work?
I mean, it's a mix, really it's a relationship based business. It's like, who do you know and how can you, how are you connecting with these people, especially with brokers? What we try to do is stay in touch with them, reads out regularly and make sure that that they'll send deals to us. I mean, obviously an off-market deal would be great. Most larger apartment complexes do get advertised because they're trying to get the best return for their seller, right? But yeah, I mean, definitely those connections with brokers seem to be kind of the best approach now. I mean, I've bought some smaller properties through direct mail, as I know it's super popular in the single family space too and stuff, but I don't know that works on a 200 unit apartment building. It works on a 16, 20, 30 size unit. That was a good experience. But so really, what are you targeting? What are you trying to buy? If you're trying to buy a 20 unit, I think direct mail would be a good opportunity. 200 units, you need a broker relationship, a mini broker relationship for sure.
So how do you establish that relationship? Have you been just cold calling some of these brokers, introducing yourself, or is there other avenues that you go down?
Yeah, I mean, what I like to do is when I go to, first kind of connect with them remotely, email, phone, and just, making sure that broker handles the type of properties you're interested in. So if you're looking for a 200 unit apartment building, make sure that, Joe Broker sells or brokers those deals, right? Mm-hmm. And then, start getting those conversations, call them on a regular basis. And also very importantly, when they send you deals, look at the deal and give them feedback and say, yeah, this is the right area, but I just can't make the numbers work because of whatever. So, just doesn't become just a black hole, right? And then, when you go to the market, set up, meetings with them, lunch meetings, coffees, dinners, whatever it is, to really become a familiar face to them, So and if you ever find a property you want to buy, make sure you do what you're gonna say you're gonna do, like follow through. Don't start renegotiating and retrading everything. Just be a man of your word, I guess, right? So people take you seriously.
Well, if people were interested in getting into multifamily investing, you already touched on quite a few things, but how would they get started, and how would they get a hold of you?
Well, I think to get started, you have to decide, do you want to be active? Do you want to control everything, and do you want to buy your own property and manage them, or maybe have somebody else manage them? But your own portfolio, if that's the avenue you want to go, connect with brokers and try to find, 4, 8, 12 units that you can buy. That's it's a good way to get experience. It's also, I find the smaller properties don't always perform as well because they're not big enough to scale, right?
Right.
If you're, like your job and you just want to, build some long-term wealth and get some passive income, getting into a syndication is an awesome way to do it too, as a passive investor, right? Just go out there, connect with people that syndicate. It's, people not familiar, syndication is essentially a group of people that come together for the purpose of buying a large apartment building. There's active people and there's passive investors in there, and the passive investors put money in but don't have any day-to-day operation on, but they just get expected return on their money, right? So, So I've done both. I mean, I like the mailbox money. I also, so I find there's value to both sides. You just got to figure out what kind of investor you are, right?
Right. So coming to the end of this, I always ask: is there any question that I didn't ask that you wish I would have?
No, I think we've covered a lot of it. I mean, I like to kind of offer to people that listen to your podcast. I like to talk to people from everywhere. So if anybody want to get on a call with me, they can go to my website, opendoorscapital.com/call, and they could book a call with me. And I've had dozens and dozens of calls, and connected with people all over the country, and it's been an awesome experience for me. So.
Yeah, that'd be great. And I will definitely make sure I include that link in the show notes. But I really appreciate your time and your expertise. And it's an amazing story to hear, especially knowing that you're an immigrant that has pulled this off in a relatively short amount of time. I mean, that's really cool.
Yeah, I think it's just we can do anything we set our mind to. We just got to be clear about our goals and then work towards our goal on a daily basis. And I think anything is possible, So. That's kind of the mindset I have.
Yeah, it's a great mindset to have. So thank you again for joining us this week.
Thanks, Jack. I appreciate it.